Be honest, how many times have you marked the wrong trend, thought you were buying the dip, and the market destroyed you? That's not bad luck. That's all market structure. And if you don't understand it, you keep bleeding accounts no matter how good your entries look. I've been through that pain myself. Blown accounts, and that I mastered market structure, everything is changing. I started catching moves with confidence instead of guessing. In this video, I'm going to explain market structure step by step, from trends to shifts to traps. So by the end, you'll see the market with a whole new lens.
Market structure is the overall framework of the market, and it includes stuff like ranges, the trends, the price movements, and so on. And with all that, I'm going to be showing you what each and every term means. Trend is just the direction in which the market is moving. A range is a price area where the market tends to trade between the support and the resistance. That's a range. With that said, that takes me to the types of trends, which include the uptrend, the downtrend, and the ranging market. In an uptrend, price keeps forming new higher highs, and so what I mean by that is, by this, price is actually in an uptrend, whereby price is gonna be forming higher highs and higher lows. This is an example of an uptrend. And for a downtrend is where price keeps forming new lower highs and lower lows. So this is what I mean by that. This is an illustration of what a downtrend really is. So, and this is a downtrend. And in the ranging market, price keeps between the next support and resistance levels. So this is what I mean when I say of a ranging market. Price keeps consolidating between the next support and resistance levels. So with that said, I'm gonna be explaining to you what support and resistance zones really are. So that takes me to explaining to you what support and resistance really means. A support is that area where demand is so strong enough to overcome the sellers. That zone where demand overcomes the selling pressure is what I call the support level. And for a resistance level, it's that price where the supply tends to overcome the buyers in the market, thus resulting to more sellers in the market. So this is a resistance level, and this tends to be a support level. So up next, it's identifying market structure, and I'm gonna be guiding you through the exact steps on how to identify market structure so that you don't get confused in the chaos. So literally, I'm gonna start with the first method, which is the use of higher highs and higher lows. This scenario happens in the bullish trends, and literally it's where the market goes on forming higher highs and higher lows, and once price forms a new higher high like this one here, that indicates a bullish continuation. So with that said, guys, one way of identifying market structure is by use of these higher highs and higher lows. So let me show you how to mark them. So if this was our previous higher high, once price breaks past this higher high, then it will form a new higher high that we shall be having right here. So this turns into our new higher high. This high that we're having right here becomes our new higher high, and literally this is what I call the higher low. So, and this becomes our new higher low. This right here, guys, this is what I call higher high, higher low, higher high, higher low. So that's one way of identifying market structure. Method 2 of identifying market structure is by use of lower highs and lower lows. So let me show you what I mean by this. Once price breaks this previous lower low that we're having right here, that will indicate that price is forming a new lower low. So this becomes our new lower low, and this is, so automatically this becomes our lower high, and once price breaks this also other new lower low to form a new lower high right here. So what I mean by that is this right here becomes our new lower low, and this right here becomes our new lower high. So this is the second method of identifying market structure. It's by use of the lower highs and lower lows in the market. So when this happens in the bearish scenario, so don't expect to find lower highs and lower lows in a bullish scenario. Maybe if and only if price is changing structure, but otherwise the higher highs and higher lows only happen in the bullish scenario, and the lower highs and lower lows only happen in the bear. The next method is by using the swing highs and swing lows. So I'm going to be defining each and every one of them. So a swing high is a peak in price that's higher than all the surrounding prices, and for a swing low, this is a drop in price that's lower than all the prices near it. To show this to you on the chart, By SH I'm gonna be meaning swing highs, and by SL I'm gonna be meaning swing lows, not stop loss, guys. Alright, so if this is our swing high and this is our swing low, so I'm gonna be marking for what I mean when I say swing highs and swing lows. So our next swing high is gonna be this one right here, this one here. Yeah, this one is my next swing high, this one here. So the reason I'm making this my next swing high is because this is not a valid swing high, because it has not broken above this most previous swing high that you're having right here. So a swing high, the new swing high is only formed after a break of the most recent swing high. And yeah guys, for a swing low, it's this trap that price forms. Our next trap is gonna be this. So this is our next swing low. Yeah, that's it guys. So my next swing low is gonna be this one right here, and our next swing high is gonna be this point here. So this is where I'm gonna be having my next swing high. Let me demarcate it. This is where I'm gonna be having my next swing high. So the peak here, where price is at the peak, so that price at the peak, it's my swing high, and my next swing low is gonna be this point here. So guys, that's what I'm trying to show you, that it's also used to identify market structure when you mark your swing highs and swing lows. That's what I was showing you. So this is a bullish scenario, and it's the swing highs and swing lows are showing that price is actually trending upwards, and yeah, they are used to identify market structure. So still on swing highs and swing lows, once the most previous swing low or swing high is broken, that could also indicate a change in structure. Literally, this is what I'm trying to show you guys now. For a bullish, if it was a bullish scenario like the one I was showing you right here, if it's a bullish scenario, once price forms a swing high here and then a swing low, then swing high, and then price literally breaks the most previous valid swing low here that we're having here, this shows a shift in structure. Literally, we are gonna be changing our trend from bullish to bearish. That's what I'm trying to show you guys. So this alone shows that structure has changed, so we actually start forming new swing lows and swing highs, but in the bearish direction. So they can also be used to show trend in the market. So guys, I don't know if you've seen how swing highs and swing lows are used also in identifying market structure. So that takes me to the breakouts and market structure shifts. Starting with a breakout is simply a break of a previous level. That's what I call a breakout. And for example, if price was maybe ranging and then suddenly breaks the previous level, this makes this a breakout. And if it was trending maybe upwards, the bullish structure, and then price was maybe trending, each break that we see here as price is forming a new level, it's what I call a breakout. As price breaks above the previous structure, it forms what I call a breakout. Let me show it to you clearly. If this was our maybe, so if this was our resistance, as you see price rejected the first time, third, second, third, fourth, so literally it formed a resistance here, and once price broke above it, formed our breakout right here guys. So this is where our breakout happens. So a break and retest trader would wait for a retest here and then continues, but literally our breakout is here where price actually reacted, and the market structure shift is simply a change in the market's trend. So if I was trending bearish and then suddenly I break above the previous lower high that we're having here, this lower high, that if we break it and form a new higher high, and then price starts forming higher highs and higher lows, simply it's the change in market structure. And the reverse is true for the bearish instance. If we are trending upwards and then price suddenly breaks below, it forms what I call a market structure shift. So it's actually changing structure, and yeah, it's here indicated by breakouts. As you see guys, this was the breakout here. So it's usually indicated by breakouts and changing pattern. As you see guys, here we are trending downwards, and then we actually changed to the bullish side, which indicated our market structure shift. So for the bearish instance, let me show it to you here guys. Let me show you. So if we are trending upwards, as you see guys, so if we are trending upwards like these are highs and higher lows, and then price suddenly breaks below the most recent higher low, that shows a market structure shift. And then to show that we have changed structure. So we are forming higher highs and higher lows, higher highs. So now we are forming lower lows and lower highs. So that's what I was trying to show you guys. And yeah, that right here there also becomes our market structure shift. So guys, don't be confused. Market structure shift is just a change in structure of the markets. Simple.
Listen, if you master indicators, you might win a few trades. But if you master structure, you master the entire market. Because structure is the market's language. Every high, every low, every break, every shift is the blueprint that the banks use. And if you ignore it, you always be chasing. But when you understand it, you stop reacting and start predicting. So before you chase the next strategy, get this drilled in. Strategy first, profits later. And remember, sovereignty is the real goal. Trading is just a vehicle. If you got value today, lock in with me for the next week's breakdown, because I'm about to show you how to combine market structure with supply and demand for sniper entries. That's where the real game begins. As always, we're on this journey to success, and I'm cheering for you every step of the way.